Hey Trader. Okay, so gonna continue this Asia model review and want to talk through timings, sessions, and framing. So taking a look at the trading session, so taking this chart from Investopedia on the left, these are the trading sessions, and we know New York Stock Exchange, a highly ranked marketplace. It's listed as hours, and I want to use that same methodology to now look at the markets that affect the FX pair that I've chosen for this Asia model, which is Australian dollar, Japanese yen. So table on the left is from Investopedia. Table on the right is from Forex Factory, and this breaks out the timings of when the markets are open. But I want to try and find the overlap or correlation between the two. So these trading sessions for indices will obviously have tighter timings than the trading session for Forex markets. There's some relevant information here that I think is going to really hypercharge the Asia model. And so first off, looking at the New York session, this yellow box I added is kind of like the pre-market activity. So we know that the market is available or open at certain times using electronic trading hours. But realistically, there is a pre-market session before that 9:30 bell, and that's about 8 a.m. till 9:30. We get the news embargo lift, we get all that stuff going on between 8 and 9:30, but that's like a pre-market time. Applying the same thing and using the Tokyo Stock Exchange trading hours and the Australian Securities Exchange trading hours, the Sydney and Tokyo markets also have a pre-market time. I'm going to prove why 6 to 8 p.m. is considered at pre-market time. Well, simply looking at the Tokyo market and converting their time 9 a.m. from JST to EST, that is actually 8 p.m. Similarly, the Australian Securities Exchange converting their 10 a.m. time from AEDT to EST is also 8 p.m. So I'm putting forward that, this pre-market activity, even though it's listed as available for Australia, is really pre-market activity until both of these markets will overlap and open at 8 p.m. Now, the additional piece here is that Tokyo, unlike the other markets, has a listed lunch break. So 11:30 to 12:30, which is 10:30 p.m. to 11:30 p.m. is the Eastern Standard Time breakdown. So let's throw that onto a chart, and I'm going to overlap it with some volume bars for AUD/JPY taken from this broker, Pepperstone, and it kind of lines up, like everything makes sense. We've got low market volume coming into 8 p.m. So at 8 p.m. we have higher activity, just taller bars on the bar graph. And then we have something happening right around this 9:30 time, which is within the Asia kill zone. And I'm going to dub this the AM session for Asia. It's their morning, so it makes sense. Even though I'm in North America, it's their AM session, so I'm going to list it as the AM session. Then taking that Tokyo market lunch hour, 10:30 to 11:30, we can see that the volume or the activity in the market matches. It cools down in that time. In fact, it stays cool all the way until just after midnight. So the PM session, I would say, is going to start at midnight and then run until 2. And then that's when we get into London trading, which is a whole nother market. And you can see that the European markets are just a higher volume of activity than the Asia and Australia markets. So what I'm doing here is I'm taking the ICT concepts of framing the market, meaning breaking down AM sessions, PM sessions, lunch hours, final hour macros, kill zones in the AM, and I'm going to apply that to the Asia model. Here are a couple of examples, and I'm going to be using this framework for anything else that I post in terms of price action reviews. I've been working on this for a few weeks, had this initially as like a very long video, but decided to just truncate it into these two relevant slides and two examples. So here's the first example. So taking everything from the model so far, framing the day from 7, 1, and 8 of previous sessions, looking at their relative highs and lows, and applying the higher time frame analysis from ICT's concepts, this is what we can break down for a day with news. So there was a 9:30 news event, and typically ICT will say, try not to trade the opening range, at least the first 30 minutes of it. So first 30 minutes, 8 to 8:30, we're not touching it, we're seeing where the market wants to go. It gravitates up into an H1 buy side liquidity. It runs that, drops ahead of the news, creates these relative equal lows. And it stays within the framing of the previous sessions, meaning it's not yet broken lower on these two session lows. So price creates these relative equal lows. 9:30, we're not trying to trade the news, we're giving it an opportunity to show itself. We see that run up into the lunch hour. This is the 10:30 to 11:30 lunch hour that I'm proposing for Asia based on the Tokyo Stock Exchange times. Lunch does not make a new high and stays within the AM range. So that AM session range ending at 10:30, we see that price stays within the AM range. In the lunch hour, we have a consolidation. We see a displacement. We go below the low. We come back into the midpoint of the consolidation and we start breaking lower. Just like we would do with an intraday profile from month 10, in the PM session, we're looking for something to happen right around that 1:30 to 2 p.m. time, going into that final hour. We see that the lunch low gets broken, consecutive candles down, fair value gap is left. We get that displacement, fair value gap return, and running towards the previous session lows. Second example, this was a trade I was able to take. So it's a 2-session up close, so pulling in the intraday mapping. So these are these market profiles from month 10 indices, and I'm taking the same liquidity concepts and applying it to the Asia time frame, and I'm using AUD JPY as my pair of choice. So previous session framing is here. We see that we are not breaking the previous session lows, but really what I want to focus on is getting into the Asia model kill zone. So here we have 8 p.m. to 9 p.m. We do not want to try and trade 8 to 8:30. We wait for price to show its hand. We see from 8:30 to 9, price sweeps a low, displaces, has that first shift within the kill zone. That would be your first entry on a fair value gap. Second entry after this high is taken on a fair value gap, and third break above the high. Still within the kill zone. There is a balanced price range on a higher time frame here, and we run up, retrace in, and aggressively tackle the AM high. So the AM high gets eaten out. Once the AM high gets chewed up, then just like we would do on an intraday profile, we're looking for a 15-minute in the leg preceding to look for a 2-session up close. We get that retrace happening all the way late going into London. London tags into the M15. We make a run for the lunch high, have an OTE, and then run back up to an H1 buy side liquidity right in that 4 o'clock hour. And the whole framing of the Asia time frame was failing to break previous session lows, but more importantly, the reason why I wanted to make this journal entry was using the session breakdown to frame a run in the AM for a 2-session up close, retrace after lunch in the PM, and then attacking a higher time frame liquidity. So I want to dig more into this. I think there's a lot more to study here, and I wanted to just put this into a video format to get my thoughts all in one place. So let's see how it goes. We'll do it again.